They gon' love me for my ambition. Easy to dream a dream, though it's harder to live it. They gon' love me for my ambition.
Ladies and gentlemen, welcome to Ambitious Traders. This is our Sunday market analysis. This is where we pick up the pairs that we're going to trade for the week. And we have not been posting in a very, very long time because we have been working on this new project. We have a surprise for you guys. There's a new PDF that's going to be launched on Wednesday morning. Look out for it. There's going to be a video and a free course that we're going to launch on Wednesday. That course is going to help you pick your own right pairs, how to pick their own right pairs. Before everything, let's get into our top 6 pairs of the week. Remember, firstly, on our top 6, as you can see, we have the USD JPY. This is the first pair on the top 6. So without further ado, let's get into it. Today on the Sunday market analysis, we have our top 6, and number 1 on our top 6, we have the USD JPY. Let's go. And as you know how we analyze the market, we usually start on the weekly time frame. It's top-down market analysis. So we have been looking at this pair for a very long time. We've been watching this pair as it has reached its highest high ever, and then now marking the highs and the lows of that market. As you can see within that's when we're done. Then move to the daily time frame, and as you can see on the daily time frame, we've been having this. See on the high time frame, we've been having this impulse. Now we're forming this correction. You can see the market has not showed any progression to the upside. As you can see, the way the market has been moving to the upside, it shows no progression for any long-term buys. So I said on the last video that I'm expecting the market to show us a push down to the downside. That's what I was expecting. And using this as my inflection point here, I said this is just a corrective structure to the downside. After impulse, we always have a correction. That's the market nature. The market moves in impulse, and then the impulses are always followed by the correction. That's how the market moves. One way or the other, we're expecting the market to shoot down to the downside, which it did from this video. As you can look on the previous video, you can see we said the market's gonna shoot down after this pattern because we saw this as an impulse to the downside. Then this is what we were looking at, a correction, then move to the downside. That's what we were looking at. Moving to the 4-hour time frame, as you can see very clearly on the 4-hour time frame. Let's zoom in into the market structure. You can see we've been moving. After this, we had the third touch of our correction, which is our sell pattern. So after the third touch, we had this impulse to the downside. Remember what comes after an impulse? Definitely a correction. So remember, a correction, we use a correction to predict the next move of our impulse. So if a correction is a reversal, it means the impulse is going to be in the opposite direction to the previous impulse. But if the correction is a continuation, it means that the next impulse will be in the same direction as the previous impulse. So what I'm basically saying is that if we have an impulse like this, then we have a correction like this, which is a bear flag continuation, then we're going to have an impulse like this to the downside. Unlike when we have an impulse like this, then we start forming this as an ascending channel. We know definitely well that this is going to form an impulse to the upside. So that's what I'm basically saying on this pair. So here, as you can see, we've been having a clear impulse. You can see the market is forming some sort of nature there. So what are we expecting? We're expecting some larger bear flag, which we'll take with the risk entry, then start taking sells from there. So this is what we're expecting from the market. This is what we're looking at from the market. Moving into the 1-hour time frame, because that's where we normally take our trade. We take a trade normally on the 1-hour time frame. We can mark our highs here. You see we've been forming this is the low of the pattern that's about to form, and then this is the high. of that pattern. And now, as you can see, this has the probability to give us this pattern. And we'll probably take that with the risk entry here and hold for a sell to the downside. Somewhere around 45 pips would be enough. There you can see 45 pips from this low, and then our target is down there, and our target will be somewhere around here, probably 9%, 10%, somewhere there. 9 to 10% can be visible on the second pair. As you can see, the second pair, which is the Australian dollar versus the US dollar. Now let's mark here as our high, and we mark here as our low. As you can see, the market has been moving quite correctively, now forming an impulse, then impulse to the downside. The market, as you can see, the market nature shows that the market has been moving to the downside. That's what you can see. The market has been moving to the downside. Then we had a deeper impulsive pullback to the upside. But for us to start buying here, what we need is a continuation for a buy. I mean that the market could give us this, like, which would be enough to give us a buy to the upside. But as you can see, the market has just retraced back to this area, which will be more visible on the daily time frame. As you can see, it's more visible that the market, this impulse that the market has been showing is just a retracement back to this level area there. You can see even the market nature, the way the market moved back to that area, it moved quite correctively. As you can see, this is just a correction to the upside, less progression to the upside. So after that, the market gave us a clear impulse. Then we had this flag here, which was a bearish flag, to go to the downside. Then after that, the market really shows an evolution by evolving into an even larger flag. As you can see, the market has evolved into an even larger, bigger correction, which means this might be indicating that we're going to have a bigger move to the downside. So that's what we're looking at, a bigger move to the downside. By connecting the highs there, you can see this is a sort of an expanding pattern to the downside. If you know what an expanding pattern is, an expanding pattern indicates a continuation depending on the area on which it's formed. It's a neutral pattern which could be used for buys and sell depending on the area. But as you can see here, we're in the middle of a structure. We're not near any high, we're not near any low. So this could actually be indicating that we are going for sells from here. That's what this pattern could be indicating. Or we could just have this area from a treble top, and then we start selling from there. That's what we're looking at. The two ways to look at it. But now, as you can see, the market has just given a nice double top there, and then you can see the market already showed a few impulses to the downside. Now we're just waiting for continuation to the downside before we can take any entry as confirmation to start our sales, which we will be taking on the 1 hour time frame. On the 1 hour time frame, what we're waiting for is just a flag. A larger flag will be used for risk entry using confirmation candlesticks right there, using candlestick confirmations to take that entry before we start taking sales to the downside. See, the risk to reward ratio is pretty decent since it's looking good. That's what we'll be looking at. That's what we'll be waiting for on the market. And if it happens that the market gives us a tight flag from here, which is also a good continuation, especially for me, from the first impulse at the high of a structure, it'll also be good for us to take it as a sign to take sales to the downside. So I think that's all from the Australian dollar and the US dollar.
Then the third pair, we have the New Zealand
From
JPY.
here, we've been
So
given this
as you can
corrective
see
nature
on
to
the
the
New Zealand
upside.
JPY, let's mark
See, the
our high
market has
there,
been quite
which we have
positive,
approached the
moving
high very
to the upside.
correctively,
So
forming a
we'll
double
be
top
leaving
there
this
at the high.
to
You can
go
see that
to move
the
there.
market has moved there. In
Mark
terms
this
of
as our new
structurally,
high.
we have formed an ascending channel
Going
to the
in.
top with a double top within it.
As you can see, the
Ascending
market
channel
has
is a
broke out
reversal
here
pattern, and
of
then
this
a double
ascending
top
channel,
also,
but how the
which is
market
a reversal
broke out
pattern
is
to
very
go to the
important. The
downside.
market has
So
broke out
now we're having the probability
as a channel.
that
You can
we
see
are
that
looking
market just
actually
broke out in
for
terms of
sales.
an ascending
Now we're
channel to
looking
the
for
upside.
moves to the
It shows
downside.
that the
That's what
market
we'll be
is more
looking out
probable
on this pair. We'll
to
be
push
looking
back
exactly for
inside
moves to the
the pattern.
downside
So that's what we'll be waiting for.
strictly. So on the
Let's see
daily
that
time
on
frame,
the
it's more
4-hour
visible.
time frame. So on the 4-hour time frame, what we're looking at right now, you can see it. Let's mark that as on our ascending channel. Coming from there, we'll be having this pattern. Let's rein that in just to avoid complication. You can see that's on our ascending pattern. After that, we had a reversal to the downside. Now the market is showing a pushback to the upside. What would be most probable is for us to have that double top and then a push back into the pattern. That's what we'll be waiting for. A double top there and then a push back into the pattern. Or reduced risk entry would be there for us to take the sales to the downside. So that's what I'm mostly looking at on the New Zealand and the Japanese yen. NZD JPY, that's what I'll be looking at. British pound and GBP and ZD, that's what we have. And as you can see there, we have sort of a double top at that area where the market shows a rejection here. You can see we have this two candles, last bearish candle showing that the market has been rejecting at that area, quite possibly. And you can see what's forming, obviously, it's an ascending pattern to the upside. See that the market is showing that forming an ascending pattern to the upside. So the ascending pattern will be more visible. We didn't actually get the third touch on this ascending channel, but we had a double top within the ascending channel. And then we had a push down to the downside, as you can see. We had this double top here and type formation after the previous.
Then our
Then we had
fourth
a push
pair,
down
do we have the
to the downside
JBP
after the double top, which
NZD.
shows that the market could just reverse from there without actually coming up to the upside to give us the third touch before it goes to the downside. So the market could just reverse from there. See, from this as a continuation pattern, it will give us that sell to go to the downside. We could have that instead of the market moving back for a third touch or even a treble bottom at that area. So that's what could be happening in the market. So we'll be waiting patiently and watching what progression the market is showing. And as you can see, the British looking very, let me bring that in, show you what the structure actually looked like. So as you can see, we're having some sort of bearish pattern formation here, which we'll be looking quite, we'll be watching within 2 minutes. As you can see, we had that the impulse there, and then now we're having this correction, and then a move to the downside. The only negative confluence about this pattern is that it forms at this trend line. That's the only negative confluence about this pattern. But all in all, it's a good pattern, and it could be more probable if we had this that structure come for third touch. That'd be a high probable trade, but you know the probability of it happening, moving back to that, are very slim. It's very possible that the market could not move back there to retest that trend line to give you the high probable trade you're looking for. It's very high probable that the market could just move from here, see, move to the downside. But what I will be waiting for sales, I'll be waiting here, waiting if I get a tight flag at this type of trend line. If I start taking sales there, that's where we'll take the entry. below that, reduce risk entry below that area. That's the only place where I'll be waiting to take sales to the downside. Oh, oh, fifth pair. Then the fifth, hmm, then the fifth pair that we have is the USD CAD. We also been monitoring this pair very well for a very long time. As you can see, we had this impulse to the downside, and then we had this corrective move to the downside, to the upside, which we were waiting for a push to the downside after this correction here, but the market gave us this impulse, move to the upside. So, but still, all in all, as you can see, this is our new high here, and then this is our new low here at this area. As you can see from here, after this, we've been moving correctively to the downside. We're showing corrective move to the downside, as you can see, moving correctively. So let's use structure separation, understand what really is happening within the market. As you can see, we've been moving correctively to the downside. This could just be a bigger correction like this. This could just be forming a bigger correction like this, and then giving us a move to the upside. This is what is more likely to be happening within this market, that this could just be forming a bigger correction, give us a bigger move to the upside. Just one possibility that we're looking at the market right now. Could be looking for buys and sells. So very neutral on this pair, waiting for either side, waiting for whatever the market gives us. Let's move through for our time frames. We can dive into this structure. As you can see, what's been forming here. As you can see, what has been forming here. The market could be evolving to give us an expanding channel. From here, we could have some sort of expanding area here. We're actually having a push to the downside. So we could have that with this area. Fill it up like that. It'd be very high probable if we have this type of area to come back here and then to give us that push to the downside. Regarding the fact that we had this clear impulse to the downside, this could be a continuation to give us another impulse to the upside. So looking at that scenario, this could be waiting for sells here at this area to give us sells to the downside. But diving deep into the structure, you can see now we're having an impulse to the upside within the structure, which means that if we have a continuation pattern to the upside, like here, market gives us this continuation pattern to go there, we can still take a buy to the upside, risk entry, candlestick confirmation. So we're going to use and then manage the trade accordingly to this area. We could use this area as our target with 7%, which is a decent risk to reward ratio, which is a more than decent risk to reward ratio. That's what I'm looking at for now, to buy this and manage it accordingly until it reaches this area. And the last pair on our top 6, we have the New Zealand USD. So the New Zealand USD, as you can see, we had a near miss there of a double bottom. That's what you could say. But as you can see, what the market has given us here, some sort of head and shoulder. Clear enough? See that, okay, the market is giving us a form of a head and shoulder to the market. As you can see that the market is giving us a head and shoulder to the upside on the New Zealand USD pair. That's what we can see on the weekly time frame. And moving on to the daily time frame, you can see that the market has been impulsed up to this area. What we could see is just a corrective move to the downside. A corrective move shows no progression in whichever direction it is taking. If the market is moving correctively to the downside, it's showing less progression to that area. So the market has to show impulses to show that, okay, this is where the momentum is going. Remember, we are following the momentum. Momentum means the high volume in whatever direction. High volume buys, high volume sells. That's what we're looking at when we're saying we're looking for progression, which is volume to that area. So as you can see, the market is moving correctively to the downside, which is showing us possible buys. That's what we'll be looking at this pair. We'll be looking for possible buys. And see, we had this area here. It's a bit of continuation. There's been a bit of breakout, but the market really showed an impulse to the upside. Now what we'll be waiting for is a corrective move here, and then we'll be looking to buy it from there. That's what we'll be looking at when we'll be looking at this market nature. That's what we'll be looking at when we're looking at this pair. We're looking for possible buys from that area. That's what we'll be looking at, possible buys. This could be a tighter flag that shows move to the upside.
That's all from our top 6 pairs of the week. Thank you for watching Ambitious Traders. Ciao.
They gon' love me for my ambition. Easy to dream a dream, though it's harder to live it. They gon' love me for my ambition.